Here's a question most entrepreneurs never ask until it's too late. Can someone sue you and take your house because of a business decision you made? The answer might shock you. If you're running your business as a sole proprietor, the answer is yes. Absolutely yes. Your personal savings, your home, your car, everything you own is fair game. I'm Lei, and today we're talking about the one decision that could save or destroy your financial future: choosing the right business structure. This isn't boring paperwork. This is the difference between sleeping peacefully at night and lying awake, terrified that one lawsuit could wipe out everything you've built. Let me tell you what's at stake. When you start a business, you've got four main options: sole proprietorship, partnership, corporation, or LLC. Most people default to sole proprietorship because it's easy. No paperwork, no fees, just start doing business. But here's the brutal truth. You and your business are legally the same thing. Someone slips and falls at your office, they're suing you personally. A client refuses to pay and you can't deliver on a contract. Your personal assets are on the line. That's terrifying. Corporations give you protection, but they're expensive, complicated, and come with double taxation. You pay corporate taxes, then personal taxes on any money you take out, plus mandatory board meetings, extensive paperwork, rigid structures. For most startups, it's overkill. This is why 90% of you should be forming an LLC, a limited liability company. Think of it as the perfect middle ground. You get the liability protection of a corporation without the complexity. Your personal assets are protected from business debts and lawsuits. You avoid double taxation because profits flow through to your personal return. And you get incredible flexibility as your business grows. Here's what makes LLCs powerful. First, peace of mind. Your house, your savings, your retirement accounts, they're protected. If your business gets sued, creditors can only go after business assets. Second, tax flexibility. Start simple with pass-through taxation. Then elect S-Corporation status when you're making good money to save thousands on self-employment taxes. Third, credibility. Having LLC after your name tells customers and partners you're legitimate. It helps you open business bank accounts, establish credit, land bigger contracts. But here's what nobody tells you, and this is critical. Forming an LLC isn't enough. You have to maintain it properly, or you lose everything. Courts can pierce what they call the corporate veil. They can decide your LLC is basically fake and come after you personally anyway. How does this happen? The number one way is mixing personal and business money, using your business account to buy groceries, depositing checks into your personal account, taking money out whenever you want without documentation. Do this, and a judge will say you clearly don't think this is a separate business, so neither do we. Your protection vanishes. You also need an operating agreement. This is your LLC's rule book. How are decisions made? How are profits distributed? What happens if you bring on a partner? Even if you're solo, you need this document. It proves you're treating your business as real and separate. Let me give you a real example. Sarah's a graphic designer in Austin selling digital templates and online courses. She formed Pixel Perfect Designs, LLC. $300 filing fee in Texas, got her federal tax ID from the IRS for free online, opened a business bank account. Most importantly, she kept everything separate. Business income went into the business account. Business expenses came out of the business account. No mixing, ever. 3 years later, a customer threatened to sue over a license dispute. Because Sarah had maintained her LLC properly, her personal assets were completely protected. She resolved the issue, kept growing, and her house, her car, her savings, untouchable. That's the power of doing this right. So where should you register? Here's the simple answer: your home state. I know you've heard about Delaware or Wyoming being business friendly. And yeah, they have advantages. But here's the reality. If you're physically operating in your home state, you'll need to register there anyway as a foreign LLC. So you end up paying fees in 2 states, maintaining registered agents in 2 states, more paperwork, more complexity. For most of you, it's not worth it. Register where you live and operate. Now let's talk taxes, because this is where LLCs really shine. By default, a single-member LLC is taxed like a sole proprietorship. You report income and expenses on your personal tax return. Simple. But here's the game changer. Let's say you're making $100,000 in profit. Under default taxation, you pay self-employment tax on all of it. That's over 15 grand just for Social Security and Medicare. But if you elect S-Corporation taxation, you can split that income. Maybe $60,000 as salary, where you pay self-employment taxes. The other $40,000 as distributions where you don't. You just saved over $6,000 every year. Yes, you need to run actual payroll, which is more paperwork. But when you're saving that kind of money, it's worth it. This flexibility is gold. Here's your action plan. 1. Form an LLC unless you have a very specific reason not to. 2. Register in your home state. 3. File your articles of organization online. Most states let you do this. Costs $50 to $500, depending on your state. 4. Get your federal EIN from the IRS. It's free, takes 5 minutes online. 5. Open a dedicated business bank account immediately. This is not optional. 6. Create your operating agreement even though most states don't require it. 7. And this is the big one, actually maintain your LLC properly. What does proper maintenance look like? Keep business and personal finances completely separate. Always sign contracts as your name, member of your LLC, not just your personal name. Make it clear that people are dealing with your LLC, not you personally. File annual reports on time, pay state fees on time, document major business decisions in writing. As you grow, revisit your structure. When you're making 70, 80, 100,000 in profit, talk to a tax professional about S-Corporation election. The savings could be massive. And if you're bringing on partners or seeking investment, you might need to adjust your operating agreement. Look, I get it. This isn't the fun part of entrepreneurship. It's not building your product or landing customers, but it's the foundation that protects everything you build. The entrepreneurs who win long-term, they get this right from day one. Your business structure isn't just paperwork. It's your financial safety net, your tax strategy, and your growth foundation all in one decision. Make it count. You can find the complete guide with all the details, step-by-step instructions, and examples at bullishbooks.com. The link is in the description. If this was valuable, share it with another entrepreneur who needs to hear it. And remember, protecting what you build is just as important as building it in the first place.